All right, now we're going to open this market in about 4.5 minutes. Looks like we're going up at the opening bell, 200 points higher on the NASDAQ. Mark Avalone, market watcher of the morning, joins us now. Can you explain this to me, Mark? A 40-year high for inflation and the stock market goes up. Explain.
Well, it is a bit counterintuitive, Stuart, and I understand that. They think what we were looking at was the number wasn't as terrible as it could have been. The core inflation number was a little better. We saw news like car prices finally dropping a little bit, and investors in Wall Street were looking for any good news to reduce this fear that we've been dealing with about runaway inflation. And it looks like to some extent it's under control.
Where's the concern that the Federal Reserve will do its job and do what it's got to do, like raise interest rates and stop printing money? Where's the concern that that will result in a recession?
Well, there is that concern. Fed doesn't have a perfect record in how they engineer a soft landing. We're going to have a huge pullback in the economy because Congress isn't spending this year like the drunken sailors that they were the past few years. That's going to be a major pullback. When you couple that with the Fed tightening, not buying bonds in the open market, raising rates, that's going to be another way to pull back the economy. We do think economy will slow in Q3. The hope is we thread the needle to pull back the raging bull market, but not create a crash. And you see the green arrows on your screen. That's what investors right now are hoping for. They're hoping for a soft landing and the economy still growing while the Fed is tightening.
Would you be buying into this market today on the hope that inflation will moderate later in the year and the Fed won't kill the economy? Are you going to do that today?
I'm looking at growth stocks because in a slowing economy, much like we had from 2008 to 2016, a slow growth economy, growth stocks do well. When growth is scarce, investors look for growth. So we have not taken our eye off the attractiveness of technology stocks and growth stocks, despite the common wisdom that rising rates hurts technology. Rising rates hurts technology companies that don't make money, speculative companies, and they've been paying the price. But big cap, cash flowing technology that's become basically a public utility for many people, that's where we would be optimistic.
Can you give me 30 seconds on why interest rates on the 10-year Treasury went down despite a 40-year high on inflation? Look on the screen, 2.71%. Can you explain that one?
Again, counterintuitive. But all these factors I mentioned, Congress not spending so much, the Fed raising rates and slowing things down, eventually in Q3 and Q4, the economy will slow. The year-over-year comparisons on inflation are going to become more favorable. We're going to see a drop in that top line inflation number, and all of that is going to take a little steam out of this rapid rise in interest rates that we have.
Well, that was a nice explanation, Mark, and we appreciate it. Let's see how the market works out today on this news.